So you'd like to know how to get into an options contract. The first thing you would need to do is to get a broker. There's a link to download Robinhood. You get a free stock as well in the description below this video. So I'm not going to go into what an options contract is. I'll lightly go into that. I'm not going to talk about how to pick an options contract and day trading strategies or swing trading. You shouldn't be day trading on Robinhood. It's not going to work. It's better for Robinhood is a great app for advanced options plays, debit spreads, credit spreads, butterflies, iron condors, all that stuff, swing trading, and it's especially learning because the user interface is very, very clean on Robinhood, and it's really great to learn versus something like TD Ameritrade, E-Trade, Fidelity, Ninja Trader. You're just going to be so intimidated and confused when you log on to any of those brokers. So let's get into it. Let's say, just like the blog that I wrote, for the sake of this video and the blog, that I believe Mara, which is a Bitcoin mining company, is going to go up for the Bitcoin halving. Bitcoin halving happened in 2020, May of 2020. Happens every 4 years. So the fourth year is coming up. April, now we got one in April of 2024. Before the last Bitcoin halving, Mara was at 42 cents and it went to $75. So you pretty much 140, 145 extra money. This time we had a low over here of around $3. I'm beating myself up for not getting it. So I'm just making up a hypothetical play here for you guys, and you'd have to have a reason to get in something. A lot of people just buy a call, it expires in 3 days on Tesla. And let's see what happens. Cross my fingers. And they blow their accounts. So anyways, I would never suggest anyone getting into options to be buying a weekly options contract on anything. You're going to lose all your money. If I were to speak to myself, I would say pick a stock that you know is going to go, that isn't speculative, that's pretty obvious, like Apple or Microsoft or Nvidia, AMD, during the bear market that happens every September of every year. Buy a call for 6 months to a year out and sit back and don't touch it, right? That's what I would tell myself. There's got to be a really solid reason that a stock's going to go. So how would I get in this? First off, I would type in Mara up here at the top of the search bar. Let's go ahead and do that again. Mara, well, it's already up, so it's popping up here. Then I would come down to trade options. Okay? I had to move this screen up a little bit for you guys. Let's move it on back down. Now, if Mara is, here's how we're going to choose an options contract now, okay? If there's going to be a halving, a Bitcoin halving that's going to drive Bitcoin up, Mara owns Bitcoin, meaning the company is going to be more profitable when this halving happens, and that happens in April. Am I going to choose one that an options contract that expires and goes to zero in 2 days? I literally have to say this stuff because a lot of the new people will be like, okay, the Bitcoin halving's in April. Let me choose a call 2 months earlier before that that'll expire worthless. All right, fingers crossed. That's literally what people do. So if it's going to be in April, am I going to choose January 5th? No. Am I going to choose March? No. What would be the best play? The best play, honestly, would be 2026. A call. All right? And let's just say, you know, this is where options come in. What if I just had $500? $500 doesn't buy me a lot of shares. That doesn't even buy me 100 shares on Mara. You can't really move the needle too much. You know, and that's where options shine when you don't have a lot of money and you're really sure on an event and you want to place money on it. Right? Always be aware of the risks. What I would choose is a January 2025. I only have $500. Great. There's a $30 call right there. My max loss, can I lose more than I put in? No. I can only lose what I put in. Okay? Make sure this says buy, not sell. Sell, entering by selling is beyond all of you guys that don't know how to trade options. I'm not even going to get into that. Okay? Do not do that if you want to buy an options contract. Okay? Call. Call means bullish. Bullish means you expect the stock to go up, the stock of Mara. Put means bearish, meaning you expect the stock to go down of Mara. Okay? What's the break even? You know, what's that? You don't need to know what the break even is. It's useless to you. Those are other videos. That's you coming in the Discord and asking questions. We can answer all that stuff. For the sake of this video, again, we're going to keep it simple. So January 17th of 2025, that buys me, 10 months plus past the halving, because usually Bitcoin runs for, a year to a year and a half after the halving. This buys me plenty of time for this. Do I have to stay in this contract till expiration? No, I can sell it whenever I would like. I can jump out of this in 15 seconds if I want. Is there a prize for holding it till the expiration? No. I'm not going to get into all the advanced, I'm not going to explain all that. I'm not going to even get into that. I don't want to confuse you guys. I want to leave this simple and speak like I'm speaking to a kindergartner so that you understand it better. You all don't know the terms if you're watching this video. So this call could go up 5, 10x, could potentially go up. It could also go to 0. If Mara decides to not, MARA, the stock, decides to not do anything at all and runs flat, this eventually will go to 0. If it doesn't go to 30, ever, and let's say Mara falls, the stock price falls, this will eventually go to 0. Now, the closer we get to this expiration, the faster that this rots. Let's see if I can do this live here. Let me pull up Paint. I'm going to pull up Paint, and I'm going to draw something, and you guys are going to have to excuse me because I am not very artistic. So we're going to draw something, and it's going to be a kindergartner drawing here, like a kindergartner put this together. We're going to explain Theta DK for you guys so you understand what happens to options contracts. So options contracts, they lose value the closer you get to expiration. Ideally, you want the options contract to be gaining value from the stock running up faster than you're losing money to Theta. So, but the shorter the time span, the more aggressive the Theta is, so the harder you need the stock moving in your direction. Right? The longer and further you go out, the more it replicates a stock owning shares, the more healthier and non-toxic it is. So, this is just a table of data, okay? This is the price over here. We're going to say that this is the price of the options contract. Down here is time. Now let's go ahead and do this. Let me choose a pencil that I can draw with. Okay, let me just test it here. Okay, I can draw with this. Great. So I wish I could have the size bigger. There we go. I'm doing a test here. Now this is going to be Theta DK, so we're going to make this red. Let me go ahead and erase this right here. Oh, it really erased it gray. Anyways, this is Theta DK. This is time. Let's pretend this is today down here in this corner. This is the expiration in January of 2025, 17th of 2025. If MARA, the stock, does not move, it just remains at the same price, this is what would happen to the options contract. Okay? It would run flat, and it would start peeling down in price and value closer to expiration. And then when we get to expiration, it would just go vertically down. So it's not, Theta DK isn't really going to affect the contract price too much in the beginning. And the closer we get to expiration, the more it's going to affect the options contract until it's worth nothing at all. So just be mindful of Theta and excuse this crummy drawing. But if I'm expecting Mara to go up in value, if I only had $500, I may be able to turn that 500 into, if Mara went up 2 to 3x. You know, let's just say it went up twice to 30 bucks. You know, it's around 15 now, 17 now. I may be able to turn that money over twice, 500 into 1,000. If I was in this options contract, I could potentially turn that over 5, 6, 7 times. So that's where the beauty of options come in. They can really move the needle without having a lot of money. So common questions would be, you know, what's the break even? You don't need to worry about that. Do I have to hold it until expiration? No, you don't. Can I get out of it whenever I want? Yes. Can I lose more money than I put in? No. If you're doing this on the sell side, I don't even know if Robinhood would let you lose more than you have in your account. I'm pretty sure they have protections on there for that, but that's another video, like I said, and I taught you guys Theta DK. So when to take profit, technical analysis, you know, strategies, those are other videos. This is simply how to get into an options contract. So let's do this again. We're going to come over here, all right? I want to buy Apple, an Apple call, because I believe, I'm making stuff up here, I believe they're coming out with the new EV iCar next month. Okay, they're not, but for the video, trade options right here. And on mobile, you're going to hit trade and then trade options. It's going to show up. Okay, and let's say I believe it's coming out mid-January. Would I buy a mid-January call like an absolute dingbat? Absolutely not. I'd buy a February 16th minimum or further. Right? We want time on it left. You don't want it to be rotting aggressively by the time that you're speculating the event or whatever reason you got in is going to drive the stock up. There has to be a reason. The stock market is been beaten down ferociously, and it's a good stock. I know you new guys, you all focus on junk companies. Every new person focuses on absolute junk companies. Don't do that. Focus on the obvious. Apple, Nvidia, AMD. You know, I could go down the list forever with great companies, but we're not going to do that right now. So February, buy, call, and you choose a call. This is the share price down here. This is the last scenario we're going to do. This is the share price. You can buy deep in the money, right? They're going to cost more. You don't want to buy too far out of the money. The further out of the money you go, what do I mean by out of the money? Well, the price of the stock is 197. If we're going up to 230, I mean, it's going to have to move a lot. The further out of the money, away from the stock price you go, the slower this moves when Apple goes up. It'll start moving faster if Apple can get to 230. If it's at 225 plus, then this will actually move. So you can assume for every dollar Apple moves, this may move like $1 or $2. It may go from $22 to 24, right? Versus if I bought a call here and it's at 197, that's pretty close to the money, meaning very close to the price of the stock of Apple. For every dollar this moved, Apple moved, this would move like $70. I'm shooting from the hip on the numbers here, but generally. Keep that in mind. And these can go to zero, and the Theta DK can be pretty immense on these. You know, if Apple runs flat, you know, it has to move fast if you're going out of the money. If you want to go really out of the money away from the stock price, you need time, and you need a lot of it, right? But that's $2,000. So just what I'm trying to say here, guys, is don't get lured into cheap options contracts just because of the price. It's like anything, you know, if you get what you pay for in most cases when it comes to buying options contracts on the buy side. So you generally want to be closer to the money. How close? That's going to have to come with experience, but going out, you know, saying that Apple's going to rip $30 in a month is pretty dramatic. So if it were me choosing, I would choose something, you know, about 210 would be, you know, that's a $10 move is pretty dramatic. That's even pushing it, but 205 to 210 would be great if I believed it was going to go up for a hypothetical scenario. So guys, if you like this video, I'm going to do more how-to videos to help the new people out. Please like and follow for more.